The debt cycle in 2008 really was the kind of end of the financial system. It was the point that we all knew was coming, which is like, you can't have this much leverage. Look at what's happening. We're decentralizing power. So now people can have the source of power at their houses. So therefore, you don't need the huge storage. People say, well, you can't scale solar. Well, you can at a house level. You can do it probably at a village level. Nature's going to trade at a huge premium in a world of robots and AI, when you can just kind of leave that all behind. If you ask a young kid now and say, what do you want to be when you grow up? They will say, I want to be an influencer. And we think, are you crazy? But what is an influencer apart from a community leader where they have a community of people? It's actually, maybe they're being adaptive already. They've done it in Fortnite. They've done it in the gaming world as well. But in the end, people want the human to human experience.
Raoul Pal, in a recent interview, explored the differences between the 2000 and 2008 financial crashes. He went on to stress the importance of decentralization, the coming tidal wave of AI, and the need to foster genuine human connections through communication in a rapidly changing world. Raoul Pal is the CEO and co-founder of Real Vision Finance. Make sure to watch until the end of this video, where Raoul Pal discusses the Everything Code and how it relates to the crypto and wider financial markets. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Raoul Pal and his thesis on market cycles.
Weird about the Everything Code, and I'll explain what it is. What's weird is it makes everything so simple.
Too simple.
That most people think, well, this can't be possible.
Yeah.
We kind of knew it in Bitcoin world because we could see a cycle forming, and we've been following this cycle kind of dumbly, like, well, it's kind of maybe just the halving cycle. We don't really know. And then I started digging in and realized that the business cycle was perfect. So the business cycle, I used the ISM survey, and it was a perfect cycle. I'm like, that's weird, because if you remember, go back prior to 2008, we'd have these long periods of no recessions, short periods, and it was variable. But suddenly it's like a metronome, as you say. I'm like, what's that all about? And eventually it led me to realize that 2008, I think, was the Great Reset. The one that people keep expecting happened. What they did is they basically they told everybody they could forego paying interest on all their debts, which was zero interest rates. And then they tried the new trick of printing money via quantitative easing. Now, what that did is allow every single major government in the world to refinance all of their debts on this 3 to 5 year sector. And so they all did it. And what it did was force the business cycle into this 4-year cycle. And then all the asset prices are all correlated. Whether it's tech, whether it's Bitcoin, whether it's the economy itself, it's all driven by the same cycle, which happens to be the presidential election. The next part of that is spring, when nobody quite believes that something is changing, but prices start moving higher. Yeah, Bitcoin had a great year in 2023 against most people's expectations, because spring is the time the shoots come up. Then you start transitioning to summer, which is this year, which happens to be the election year, which is when really the debt starts getting refinanced and they have to start using liquidity to finance it, because there's not enough GDP growth to pay for the interest on the debts. And so they keep rolling forwards these debts and they keep monetizing the interest payments, which is this debasement of currency that happens at about, on a globalized level, 8% a year. They're debasing currency. And then next year will be macro fall, and then eventually the cycle tops out and we repeat it again because it's based on the debt refi cycle.
Right.
That this debasement of currency of 8%, there's two ways of looking at it. You can say, rightly so, we're being robbed of our future wealth because your future self is getting poorer because you can afford less assets with your income, because income doesn't go up, the assets do because of the debasement. Or the other way is you can say, I'm paying an 8% put option fee on the entire system not breaking, because that's also what they're doing. Because 8%. They need to refinance the debt, They need to not let asset prices go too far down. So we can talk about that, but it's another way of looking at it. And you're like, would you pay 8% a year to have the entire system not break? Maybe. So you keep adding debt just to pay the interest payment.
Thanks for watching. Please don't forget to subscribe to this channel for free crypto market updates.